John Piper with the weekend video, and it's Saturday the 2nd of November. Apologies my voice is deteriorating, but hopefully this thing will be over soon. I don't mean the report, I mean my this cold I've got. Right, so I'm going to keep this slightly brief because my voice may well give up otherwise. We have the low on Bitcoin at 7.2, we've discussed that pretty fully. And we've had what looks like a 5-0 advance up, discussed that also. Since then we got down to here, which looks like a nice spike with a decent rally. The spike's actually held, but the actual action is not terribly encouraging. So we saw the initial decline down to 50%, around 8.9, and an ABC would down to here would have been where C equals 8.82 would perhaps have completed the correction. Instead we're just going sideways. I mean, it could be an A, B, maybe C, D, E kind of triangle thing, but it's not looking complete at the moment. We've got no sign it's complete basically. It's going on quite a long time. I mean, the lower trend line is sort of around here, but I mean, it's hard to justify calling that a low of any sort. Right, we look at the low down here around 8.9. There is a possible 5-row advance off it. 1, 2, 3, 4, 5. I think the third wave is just the longest, but I mean, it's not very good. Well, it's a fairly reasonable 5, but it's a very short term, I mean, a very subdued time frame, as it were. Followed by an ABC, which would all well and good if we're seeing some kind of meaningful rally, but instead of which we've got this sort of corrective thing developing. Yeah, so there are positives. I think the low is in. I think we've seen the wave low, the wave 2 low. I think we're now in wave 3 up. But yeah, the actual looks like the correction has further to go, and of course we get another surprise like we got before. So yeah, I would say, well, what you're holding, I would stay put with stops position where you feel is appropriate. I'll let you know, and I think well, when we see some action which confirms we're going higher. And it could be, I say, it could be a startling rally. I think 20,000 will be achieved possibly quicker than most people think. And once they go above there, then it could go up to 40, I think. Anyway, we'll see how it goes, but I think there's a lot of potential. Right, gold, no change of opinion here really. I discussed this on Thursday, but I mean, only subscribers only get those reports. But I think this is probably an A. This looks too much, it just does feel corrective. I'm not convinced we've actually got an impulsive move, but there's no sign of impulsive move. So I think we might well see another leg down here. Be nice to be surprised. I mean, 1520 is a key level, but you can actually see a bit of power above 1520, and that would be very encouraging, but at the moment we're not seeing it. Alright, well, silver really just confirms the picture, really. I mean, trying to find some positive counts here, but I mean, that looks like an A. It looks like a B, really. A, B, C, B wave, with one more leg down to come. That's, I think, is the best view at the moment. Looking at the fib retracement of this initial decline, so we've got, that's an A wave. This peak, the B wave peak, as I'm calling it, is right on the 50% retracement level of the A wave. I mean, it's not a confirmation that we're going to go down, but that's the clearest wave pattern I can see at the moment. I guess the other point is the bulls do seem very certain that we're going to go higher from here. At least, I mean, I can only take a small sample, but there does seem to be a sort of certainty, and the bears are being knocked, saying this is rubbish. So I mean, maybe there's a bit too much certainty that the market's going up at the moment, so maybe another sell-off is required. Now looking at the long-term chart of FTSE, I mean, this is the 1999 peak, around 7,000, and you see the market is still toying with that level, even late last year. So I mean, I don't know how much inflation has been the last 20 years, but I mean, it must be 20-30%, probably quite a lot more than that. So FTSE's trading in real terms 20% lower than it was 20 odd years ago, which is not the greatest performance. Hard to find any discernible pattern. I mean, that's some kind of correction, a big ABC correction between the 1999 peak and the 2009 low. That's how it looks really. This is some kind of fifth wave There's no clear count there. I can see it just needs to be more of an ending diagonal. A diagonal. 1, 2, 3, 4, 5. Certainly a case that we're seeing the end of something. It doesn't look very much like the beginning of something, but no clear count, no clear wave pattern suggesting an imminent collapse. But I think in this world anything could happen. If you look at the DAX since the low at 2004, 2003, that was the end of the bull markets. Ended in 2007. That was the 2007, 2009 bear market collapse. Then now I've had 5 waves up from there. 1, 2, 5 part 3, third wave. 1, 2, 3, 4, and 5. ABC fourth wave, which is a fair way above the high of wave 1, followed by what could be a 5th wave up to that peak, which was in 2018. So there's a very good case of seeing a peak on the DAX, but we haven't really got the right kind of patterns to confirm that. So look at the action since this peak at the end of 2017. So from that point, peak there, it's around 13.5 or thereabouts. I mean, a clear ABC decline, which could be wave A of a bigger decline. I mean, the 1929 collapse in the US was an ABC, but I mean, there's no sign of an imminent peak at the moment. You take out the high, then of course it's back into bull market territory. It could of course be an ABC rally, so you could be seeing a correction of sorts, but anyway, it doesn't necessarily add much to the equation. So again, a sell-off on the DAX is certainly on the cards, but the wave count is not terribly supportive right now. Right, the Dow's is similarly quite a difficult call. Again, we saw the low in 2009. There are 2 counts here, in fact. I mean, some people count that as a 1, 2, 3, 4, and a 5, so as per the DAX. But again, we're lacking the truly impulsive nature of fall to confirm. In fact, we've even seen new highs. So it doesn't necessarily negate the count, but it does confuse the issue. Right, the alternative count is that low from the low there, we actually had a 5 wave move up. 1, 2, this is a monthly chart, by the way. These will be monthly charts. 1, 2, 3, 4, 5. That was a 1 and a 2, followed by a 1, 2, 3, 4, and then a 5. And that we're now seeing a correction. But again, the problem is the correction is getting on along the tooth, making new highs, no sign of an impulsive rally really. So again, there's a certain amount of confusion as to how that's is winding its way out at the moment. So again, essentially there are certainly on the DAX and the Dow fairly clear indications that we're seeing, certainly on the DAX, an important peak. The Dow could be a wave 3 peak. But where is wave 4 and 5 at the moment? I mean, we're still in wave 4. That's the possibility. In irregular wave 4. Anyway, it's all a bit messy as regards to long-term count. I think, as I said before, the risk is the downside here. I think the upside potential is limited, and there's a lot of risk to the downside. It certainly feels like we're in the area for a major peak or major peaks. Inflation is running rampant again, as it were. The debt situation is only getting worse and worse. The currencies are at risk, I think, the major currencies. All good news for cryptos, of course, if that does happen, but not necessarily good news to people who are reliant on fiat currencies. Which I'm not sure. I would not recommend being reliant on fiat currencies at this point in time. Anyway, that's enough today, I think. My voice has helped some certain sprays. It's been very cold out. Hope you find that introduced. Have a great weekend. Thanks for listening, and bye for now.